Good morning, everyone. We're going to get right into the stock market technical analysis, and we're going to look at some trade ideas. So on this channel, if you're new, I point out trade ideas that I see. I kind of explain how to trade them, key levels to really trade off of. And that's what this channel is all about, is finding trade ideas using technical analysis. I'm not really going to go too much into fundamental analysis, but for the every now and then I'll kind of touch on it, but for the most part we're using the charts to be our guide to tell us how to take trades. So we're going to start out today with the triple Qs, but before I get going, please give me a thumbs up if you guys are finding some value in this content. I try to constantly put out relevant trade ideas that haven't triggered yet. I talk about trade setups before they actually trigger, and then when they do trigger, I do let everyone know that the trade ideas that I've talked about have triggered, and how I'm personally trading those. So leave me a thumbs up if you guys find value in that. All right, and we'll start out here with the triple Qs. All right, so no sell signal in the triple Qs. I saw a couple comments yesterday where people thought, I think they thought that I was shorting the Qs because there was a sell signal in the Qs. There wasn't a sell signal in the Qs. There was some sell signals in some individual trade ideas that I pointed out over the last couple of weeks. So I'll point those out and we can kind of look at those again, but nothing in the Qs yet. So looking at the daily chart on the Qs, more of the same. We're really just back testing this broken trend line from the March 2020 lows. And we're just walking up this trend line right there. We broke the trend right here back in May this year. And we've, for months, still just been kind of creating a secondary trend or grinding, back testing that. And you can see right here, as we zoom in that red line, there's the back test. That is a full back test and a rejection. Nothing impulsive yet. Now I flip down to the hourly chart, and you can see we gapped up this morning above that trend, and it sold down and has so far been rejected. Nothing super impulsive, though. So no real sell signals. Again, this can continue to just back test this trend line. We're back on the daily chart now. You can see that this can continue. What I'm more interested in as a sell signal, and a couple things I do want to point out, I'm more interested in a break of this lower trend line down here. Right about, it's really right about right there. If we look at the hourly, back to the hourly, this lower trend line right here is what we've been holding for, really since, May 19th or so. So 3 weeks. And I'm looking for a break of that. An impulsive breakdown of that level, that's the sell signal that I'm looking for. And if that does happen, we'll start to look for lower prices. Probably at least down to this 340 and likely a lot lower. Now, recently we have put in a new divergent high. So all this price action up here is divergent high price action on pretty low volume as well. But you see the RSI and the PPO, how they're continuing to trend down. So you can see here, right there and right there, we are continuing to downtrend basically in the momentum. This is lower momentum on higher price. So price is moving higher, and the momentum indicators are making lower highs than previously. And you can see that pretty clearly if you go to the weekly chart. Here's the RSI. You can see that we basically are right there. And if I zoom in, you can see we're downtrending on the RSI. Now, the RSI hasn't confirmed yet, so you'd want to see this to turn down to confirm. But as of right now, we have a lower high on the RSI and the PPO on the weekly. I got to just move that up there. They kind of shift around when I shift charts. And a higher price. All right, so that's negative divergence. That tells me that this high here is likely going to fail. And that's what we've seen in the Qs for quite a while. We run up and make a new high, and then we correct. We make a new high and then correct. And the new highs with negative divergence. We make a new divergent high and then have a correction, new divergent high, have a correction. Same thing as back here. The COVID drop, before the drop, it was building negative divergence, really started to put it in for a couple weeks. Right back in here, that's where you put in your negative divergence, and then you got the big drop. So it doesn't mean I'm not calling for a big drop right away. And typically, if we're going to have a bear market anytime soon, bear markets don't usually just crash straight down. The way they typically work is they trend lower over time, and then towards the end of a bear market, you'll usually see pretty impulsive selling. But usually they don't start out with really impulsive selling. So things to look for on that. That's really all I have on the cues. Let's move over to the SPY. Let's get back on the daily chart here. SPY continues to back test this green trend line, which comes off the March 2020 lows area. You can see we really created a trend here. We held support there, held support all through here, and finally had a sell signal and a break of trend. So we broke trend, ran up and doing a back test. This is the area where I think it's a very high probability that we will reject and fail. And we're going to start a correction from up here. We have negative divergence on the PPO. We have negative divergence on the RSI. So these are divergent highs. Now, yeah, we could grind around for a few more days. Even probably for another week, I could see us just kind of grinding slightly higher. But from my perspective, one of these days you're going to get an impulsive rejection, as at least that's what the chart's telling me. And you're going to see pretty sharp selling, a pretty sharp rejection and sell off as we start a correction or more. It could be more than a correction. We don't know. But we are back testing resistance. We have negative divergence. The setup is to the downside. Okay, so recently the market's been kind of grinding higher as most of the market sectors have been actually treading water sideways or selling off. And then tech, and not all of tech, but specifically really the FANG stocks, Apple and Microsoft and Amazon, have been moving higher. So that's been kind of propping the market up because those stocks have really heavy weighting in the S&P 500, and so they can keep the market up. Right now, you'll see here on Apple, we have a new high right here, just slightly above the former high right here, and it is on clear negative divergence. So let me zoom in on the PPO. Notice we have a new high in price, and on the PPO, we have a way lower high in momentum than the previous high. So we have negative divergence remaining, and so things to look for. It's not confirmed yet, because if we continue to go up and the momentum continues to go up, we will burn through that negative divergence and it will no longer be there. But if we start to turn down, and especially if you see the PPO starting to turn down, then it will be a confirmed negative divergence. This will be another new divergent high with a high probability of failing and going lower from around that area. So things to watch for on that one. Amazon, it's really the same with Amazon. We have a new high in Amazon. They bid it up, and it is on less momentum. So you'll see here on the PPO, PPO still turned up, so not fully confirmed yet. And if we continue higher, we can obviously burn through the negative divergence. But if we turn down, then that would be a new divergent high. So things to look for on kind of these mega cap stocks. You want to look for confirmation that these are going to be divergent highs. So on the PPO here, same thing with Microsoft. You've got negative divergence, not confirmed because it hasn't started to turn down. You can see right there. So we're still pointed up, but and we have a new high in price. So we have a negative divergence. It's just not confirmed. If the PPO starts to turn down, you'll get that confirmation. This will be a new divergent high with a high likelihood that we're going to fail from up here. So those are all things to watch for on the mega caps. And again, those mega caps, you really want to see those turn down. The Qs is not going to sell off if these mega caps don't start to sell off. And the S&P 500 is likely not going to go down very far if tech doesn't sell off. So this market, given the nature of the market and the mega cap stocks, they're very, everything's hinged upon these big mega cap stocks because of the weighting that they have. So you want to see these things sell off. You could have the rest of the market selling off like crazy, and if these things are rallying, the market is going to maybe grind lower or tread water, but it's not going to sell off impulsively. So you really need to watch these for indication that you're going to get broad-based selling. A quick look at gold. Gold bullion here trading above $1,800, sitting about $1,801. Again, I really see $1,800. It's about $1,790 is the key level. and we're above that. So if we can hold above that today, 2 days above that level, I think will be pretty important, and gold will likely start to rally from there. So I could expect us to kind of grind around here for a little bit, but I am looking for that to hold. Couple reasons. The major trend, if you look at gold, is up. So here is going back to 2019. You can see we're making higher lows and higher highs. 1790 is this key level right here, and I covered this yesterday, but this is important to really reiterate. Here's major resistance going all the way back in 2011. You had a quick overshoot when it was just spiking high, and this was the end, the blow off top in the bull market. You can see it pretty much went parabolic, and that was it. And then once you came back down, you tested resistance at 1790 once, twice, 3 times, couldn't get it, and then boom, into a big bear market. Now that bear market has ended, and we've started a new bull market. It doesn't mean that this bull market is going to continue, but it is a bull market until proven otherwise. So you've got higher highs and higher lows, and you can see we're uptrending. We broke that 1790 level right here, and when we did finally get above it, big parabolic just moved higher. Then it corrected over many months, a big long correction coming down to the bull market trend line. And this bull market trend line also had bullish divergence. You'll see right there. There's your bullish divergence on the RSI, and there's your bullish divergence on the PPO. So what did that mean? Well, this was a divergent low on the daily chart. We made a slightly new lower low in price while momentum was moving up, indicating that price was about to move up, and then you did. And we broke out of this correction, and we're back testing back at that trendline support. So this is a major area of support. We've already kind of broken out of this correction, with a breakout and a back test. And as far as I can tell, we should be off to the races for continued upside in gold in a ongoing bull market. So looking good, still looks good. The miners still look good. Everything looks bullish. I don't see any bearish signs really in these miners or gold in general as of right now. The dollar, we can look at the dollar. It's kind of breaking out, but it's struggling here. So you can see on the DXY, we have this downtrend line on this daily chart. And we're starting to pop above it. You look at the hourly, we're kind of popping above it today, but it's struggling. It's not super impulsive. So we'll see how the dollar behaves. I suspect, the Fed minutes come out today at 11 Pacific time, 2 o'clock Eastern. And I suspect they're going to move these markets, the dollar and gold, because it's all about interest rates. And so watch that. Those minutes will likely have some sort of an effect on dollar and gold. As of right now, as far as I can tell, gold looks bullish. The dollar is above, but I think it's going to fail here. So we'll watch that, see if this goes lower. Okay, let's look at some of these short trade ideas that I've talked about. MGM, I talked about that being a sell signal yesterday. We're down another 1.5%, and at the lows today it was down even more. So from basically from the break of this trendline support, it's already fallen 7%, so almost 7.5% at the lows in just 2 days basically. So far looking good. Now we did hit that first level of support. If I go to the hour, right here it falls about 39.75. I drew that line because if you look at the hourly, you can see in the past we've had reactions around that line. Here we held resistance, there we were resistance. We then gapped above it. Here we held it as support. So there's these reactions that we've had along this trend line. It's not it's chopped through it quite a bit, but there are reactions that are happening along that. So I suspected that if we hit that, we're going to at least get a reaction, and we have so far. So you can see we basically got to that trend line there, and we got a little bit of a bounce. Now, we could bounce a little more, but I think there's more selling coming because we just got a daily sell signal on this chart. And the big pattern is coming all the way back to the March 2020 lows. You can see all the times we held this trend line here, held support. We put in a bearish rising wedge, and as we were wedging higher, each new high was a divergent high. So new higher high in price, momentum was downtrending. So everything's indicating that we're starting a correction or some sort of a reversal in this in MGM. And at the high here, we did have a big doji candle right there, a big reversal candle as well. So as far as I can tell, this little bounce that we're seeing so far today will be faded, and down we go. We're going to go lower. My target for this one is really going to be probably right about here at 34. It's right here at 34 bucks. You can see that was major resistance, and then it was support here and here. So we've got 3 reactions on that trend line at around 34. So that's going to be at least the first target. I think we're going to sell down all the way down to there. That's still down another 15%. So I like that. Looks like it's going to continue with more selling today. GM, more selling today, down another percent. It was down more at the lows. Again, we broke the trend line support. So here on the daily chart, here's your upward trend line. Near the highs, we put in negative divergence, and that's your last divergent high. Broke trend with a sell signal yesterday, and we're seeing some more selling today. So again, we can bounce around a little bit, but I think you're going to see lower prices over time. Target for this one, I like this level right here at 46.75. Yeah, it's about 46.85, I guess. Again, if you're shorting, you always want to step in a little early and cover your short as you come into major support levels. But again, I like this level as a near-term target, and I think it still looks good. This one, SeaWorld, SEAS. Discovered this trade idea on our Saturday live stream. If you haven't joined the live stream on Saturday, feel free to join. I usually do those around 10 o'clock Pacific, 9:30, 10 o'clock Pacific, and around what is that Eastern? 1 o'clock Eastern, so right around there. So look for the video premiere to show up and hit the bell notification if you haven't done so, if you want to get notified of those. But I do live streams where we go through all kinds of charts and cover trade ideas. This is one that we covered in last Saturday, and it's on watch. We have a sell signal as of today. So this is SeaWorld. You can see on the daily chart, clear uptrend line right there. All right, at the high here, it's been treading water, making slightly new highs in price. But each new high has been a divergent high. So look at the RSI and the PPO, just completely trending downward while we just continued to pop and make new highs. So that shows that the momentum is dying here. And if you know what to look for, you wouldn't necessarily want to be riding this thing long. And you're looking for, what I'm more interested in is looking for a break of trend and a downtrend. And there it is so far today. We'll see how the day closes. If more selling comes in, but that is a break of trend as of right now. Again, you do want to see that daily close, and the better, the more impulsive and redder it is down here, then that's better. So look for that, and there is a level of support right here about 46.54. You can see we held that support right through here a little bit. So if you want to be conservative, you could wait for that to go. If that breaks, I think it's going to be a pretty swift move right down to 35. It's about 36 bucks. All right, so we could hold some support, maybe just bounce around here for a little bit and then go. That's what I would expect. But if you want to be conservative, you could wait for that level. Wait for a solid close, an hourly close below that level, and that should set us up for a move right down to 35.81 with likely a reaction here at 43, about 43 bucks, because there's a gap right here that would get filled. So the way it'll work is if this level breaks, we go down and hit that, probably bounce, and then go like that. All right. We have a sell signal on that one as of right now. And CARR, Avis Budget Group. Again, uptrend line here off the March 2020 lows. Clear uptrend, lots of reactions. Near the highs up here, we put in negative divergence, and we're looking for a break of trendline support. We have that break right here. So there's a sell signal yesterday with more selling today, down another 2% today. Looks like a good solid sell signal. Now, it could be a bear trap. You never know if they're going to gap it back up and then just run it higher like that. That happens sometimes, and you just have to take the trade. In my opinion, you just take the trade for what the chart shows you at the time. And if that changes, then you know that you're wrong and it was a bear trap and you get out. But as of right now, it's a sell signal. We do have a level of support right here at 72, it's about 72.43. So you could wait for an hourly close below that. You get that hourly close below that, I do believe we're heading straight down to 51, about 51.12, 51.20, right in there. Level, there's some support. That was former resistance. here and here, and we finally broke. So I think we'll head straight down to there. And that would be the target, the near-term target for this trade. That would still be a profit target of about 33%. So nice trade there if that works out. So far it's looking good. We'll see if the selling continues. Boyd Gaming, so we've been in this one for a while. I've remained short because there's no reason to get out of a trade when it's technically nothing's wrong. So on Boyd Gaming, daily chart, here's your uptrend from the March 2020 lows. Up near the high right here, we made a new high with negative divergence. See the RSI and the PPO completely trending down. So you look for a break of trendline support, which came right here. That's your sell signal. And we basically sold off, had a low kickback rally, never really went underwater from the sell signal and continued to sell off. We were creating, we created this flag pattern. Today we're making a new low so far today. We'll see how the day closes. But if you get the daily close, down in this area, then I think we're going to continue lower. I see the next level of support. There's a little bit of support right here at 55.40. But I think we'll probably run down to this 50.82 area as the next level of support. Below that, we've got a level of support at 43.72. And then we've got a major zone of support all the way down here in this area, which I do think would probably be the final target for this trade, down anywhere from 39 down to about 36.30. Somewhere in there that's a zone of support. So likely, if we got down there, I'd likely be covering my trade, just probably once we hit the top of the zone, I'd probably cover. But that one still looks good, breaking down today another 3% and continuing lower. As far as I can tell, we're downtrending. Okay, I'll wrap up with these ag commodities because I don't see anything else that's actionable or triggering today. There's lots of trades that are very close. Tesla looks like it's about to break down and continue the downtrend. There's lots of trades out there that are, look like they're weakening or, gonna take action soon. And I'll point those out. Again, I'm short Tesla, but I'll point those out when they start to trigger. On wheat, this is ag commodities. So wheat is right at major support. So you can see here's the uptrend in wheat, and you've got support, 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 3 tags of that, and we're at that again. So 4th tag of that trend line. This is support. You also have a little bit of support right here. It's about 597. You can see we held that area of support here, and then when we broke, it was resistance. So we could have a short-term dip below there. This is the buy zone for wheat if it does get down there. And also it's a buy zone right here. So I've started to buy wheat. I bought some here, and if it goes down to this 597, I'll buy some more. I really wouldn't want to buy it below there. If it starts to go below, I'd actually start looking at areas to exit the trade or stop out. But looking bullish down in this area, things to look for. And on corn, you can see corn this is the major support zone as well. We're not quite there, but very close. Held support. This is where we started the trend, held support here, and we're coming into that zone of support again. Now, again, if corn wants to break that trend, we do have some support here at 1750. So that would be the buy zone, anywhere from tagging the trend line. And if it breaks, I think down to 1750 would be a good area to potentially look at corn. Soybeans, that already broke its upward trend, so it's very possible these other ag commodities are going to do the same. On soybeans, you have a clear ripping uptrend. And again, it's very common that we're going to get a good correction out of this because from the low to the high, when this thing took off, it's up, 80% in just a matter of months. So it exploded higher, and so to see a pullback would be very common. We have a level of support here at 2050. It's about 2050, but here's the uptrend. Broke trend here, back test. If I extend the trend line out, you can see it was a back test and then a rejection and failure. So I think it's likely we're going to come down to 2050, probably get a reaction or a bounce there. So we'll watch that, see how that plays out. And then coffee, Joe, I've got the buy zone down here at 40.75 down to 39.94. That's an area of, you can see here, we were holding resistance. We had a gap, former gap right there, but we held resistance here, here, here. finally broke above it, and then it held support. So that's the buy zone that I can tell. I've got it marked out. We're getting close. I think a little bit lower. And it'll be the area to buy. Also, on all these ag commodities, when we approach the areas that I've kind of called out as being buy zones, I would like to see bullish divergences start to show up, like in the hourly chart first and then probably in the daily. But I want to see some bullish divergences start to show up as we enter into these buy zones, telling me that the momentum is starting to increase to the upside and price will start to reverse. So those are things to watch. Leave me a thumbs up, guys. If you're new, check out my trading course. It's really a stock market technical analysis course to help train you in the skill set of reading charts and finding trade ideas for yourself. It's only $99, so very cheap. It's not cheap. I think it's valuable, right? It's a very valuable course. The knowledge that you'll gain for $100 is well worth the money, in my opinion. I wouldn't spend 5 hours training someone for $100, so you can get that training directly from me. It's about 5 or 6 hours of training in that course for $99. So good deal there. And I'll catch you guys on the next one. Bye.